Hello and welcome to the first fastest 4 minutes in finance for 2023. I'm Scott Inman. In this week's segment, we are looking into what a recession could mean for the housing market. If you were trying to sell a house in the first 6 months of last year, chances are you got rid of it pretty quickly. If you tried to sell it in the last 6 months, though, that's probably a very different story. According to Brian Wesbury, he's the Chief Economist at First Trust Advisors, home prices rose 40% from May of 2020 to June of 2022. Money was loose, mortgage rates were low, and Americans were relocating during and after the pandemic. But since June, prices have fallen around 2%. Now, that's not a big drop in prices, but there has been a big drop in sales. Wesbury writes that existing home sales reached an annualized rate of 6.65 million 1 year ago, the fastest pace since 2006. But by November, just 2 months ago, sales had dropped to a 4.09 million annualized rate. That's a 38.5% drop in sales over the course of last year. Wesbury writes that we can chalk the housing crunch up to one thing: the Fed raising interest rates. Home buyers are faced with paying more if they need to borrow money to buy. According to Wesbury, with a 20% down payment, the rise in mortgage rates has equated to a 52% increase in monthly payments on a new 30-year mortgage for the median existing home price. That has taken many buyers out of the market. But on the flip side, and here's why prices are not dropping at the same pace as sales, sellers are locked in to much lower rates. So if they need to buy a new home after they sell, which most people do, they would have to deal with that increased mortgage payment as well. They would also be reluctant to take less for their home. So prices have held up better than sales. It's also created a stalemate. Sellers want more for their homes and buyers want to pay less. So where do we go from here? Wesbury expects to see both prices and sales continue to drop in 2023, but not on par with the past. He predicts the total price drop from peak to bottom to be between 5 and 10%. It was 25% from 2006 to 2011. He says home prices are close to fair value when measured against construction cost, and there is no massive excess inventory, unlike the previous housing crisis. Wesbury writes that housing is rarely a bright spot in recession years, and this year he believes will bring a mild recession and bring housing down with it. However, he adds that we should not expect a catastrophe like 2008. Housing will rebound swiftly after the recession. Thanks for listening.